Hello and welcome to Blythbury Business News. Today I'm joined by Ron Heeks, who is Managing Director of Larvotto Resources. Larvotto, listed on the Australian Stock Exchange, the ASX, with a symbol of LRV. Ron, welcome back on the programme. You've just produced this definitive feasibility study on the Hillgrove Antimony Gold Project in New South Wales in Australia. Can you run us through some of the economic highlights of the DFS to get us started, please?
Thanks, Tim, and it's great to be back to give people an update. Yes, it's been a huge 5 months trying to get this DFS out, and really at the end of the day, we're at the RIU conference in Sydney last week, and pretty well everybody came up and said it's one of the best they've seen in many years. So it really is a cracker. I mean, I'm sort of obliged to say that, but the numbers really do speak for themselves. So on our mid-case financial scenario, which is still pretty low, 2,800 gold, 41,000 antimony, because gold a lot higher than that. Antimony currently about 60,000, so well down on that. But 700 million MPV, these are Aussie dollars, 700 million MPV, an IRR of 102%, which is quite amazing. We will put out 40,000 ounces of gold and 5,000 tons of antimony, but our all-in sustaining cost on gold is negative 1,300. So that truly is a winner. And if we talk about that at spot, the all-in sustaining cost is actually negative 3,200. Quite amazing, and a MPV of nearly 1.3 billion at spot prices. So it really is quite an amazing, robust project, and it's about as de-risked as you can get given the infrastructure we've got.
Okay, so the financials obviously stacking up very well there. What does the definitive feasibility study tell us about life of mine, annual production targets, and some of the operational aspects of Hillgrove?
Yeah, life of mine on our initial study, and this is only our initial study, is 8 years. We have still only converted about a third of our resource base, and we did that to be able to get to this point a lot quicker, and we will continue to work on converting more of our 1.7 million ounces in resource into reserve. So that's something to look forward to. Currently producing at spot, at our base case, about 80,000 ounces equivalent, and that's 40,000 ounces of gold and 5,000 tons of antimony. At our mid-range, which is really what we're focusing on, because I think the numbers are more realistic on that. You're talking about a 100,000 ounce equivalent project from a 500,000 ton per annum plant. So it's pretty good stuff. That gives you a payback of about 11 months. So it's pretty good.
Okay. The DFS does show that the capital expenditure, the CapEx, has increased since you did the PFS. What's caused the increase in the CapEx?
Look, fundamentally, it was a change in plan that we talked about previously. We were going to put in a wet tailings dam. That was going to be built at the end of year 2 because we would continue to fill the existing tailings dam. But for many reasons, we've decided to go for a dry stack tailings facility. That means that we need filter presses and everything up front. Overall, over the CapEx over the first 2 years, really actually hasn't changed. The difference that you were seeing was that tails dam was sitting in sustaining capital, not upfront capital. So the total number of capital over 2 years, really, there's not much in it, but it's all been brought forward. So yes, it's made the number pretty well double on the CapEx, up to 140 million Oz. In the great scheme of things of projects, that's pretty cheap. But that number has doubled, but so has the MPV and the IRR and the money out the back end. So, it's in the great scheme of things, we're building a better plant, a more robust plant that's going to be set up for longer term. We're making it a safer plant, and we're making it considerably more efficient, because do it right or don't do it at all. So yes, CapEx up, but every other number doubled as well.
Okay, so you're clearly very happy with all the numbers going in the right direction, and as you say, building the bigger and better plant. The DFS is still quite new, but what impact has it had on helping you attract more interest from investors? And the antimony production, it positions you as globally quite significant. So, what's it done for investor appetite? What's it doing globally for you?
Oh, I think extreme, really. I've done this on numerous projects now. I've never had so many people reach out. And as we mentioned during this process, we've got 6 term sheets on the table now from very senior lenders. I've literally just come off a call to a potential funder. I've had 2 others today. I think I'm on about number 4 this week. Our full focus now is on debt funding this package. For some reason, people seem to think that we're going to equity raise the whole amount, and I'm not sure why. We've never ever said that. This will be a sort of conventional debt equity package of sort of 70% debt, 30% equity that we see. But given that 30% that you would normally have to raise, we've actually already got in the bank. So we see it as a very conventional debt equity ratio. Um, yeah, it's been quite amazing, the interest, and the funding parties know what those numbers mean. And when you're looking at an 11-month payback, they're pretty keen to get involved. They're pretty keen to get involved. So it's been extremely interesting, and it's been progressing very, very well. Because we ran our independent technical expert study at the same time as our build, were a long way ahead on that process as well. So we would be looking forward to wrap this up in the near term. I'm not going to put a date on it; it's too dangerous. But it's going better than anything I've ever done before.
Okay. Before I let you go, just tell us what other milestones you've got to hit before you can start getting towards, what is near-term production?
Well, we've ordered our long lead time items, so people keep asking us, when's your FID? Realistically, when you order $19 million worth of gear, you've probably already made that decision, because it's a lot of gear to order if you're not going to go ahead. So we've got that. We've got some permitting modifications that we need to do, and we're working very closely with the government on that. And we had some excellent meetings with them last week as well, and that's progressing very, very well. Given that everything exists and this plant operated in 2022, we're not asking for anything new or different here. So we expect that to go pretty well. Our build team are starting to get together. They'll be out on site next week, looking at the pre-works that need to be done. Everything is progressing about as well as it can be at the moment. We're still building teams, but there's a lot happening, and certainly finance, permitting is the next 2 big things. But that's not stopping us, because we're well cashed up. So the builders are out there. We'll be signing off with the build team. In the near future. We're just doing the legals on that at the moment, so it's not too far away. But that's not stopping them doing a lot of early works and planning anyway. So it's all go from this point ahead. We're not seeing any negatives from where we sit at all. The whole world wants this product. They're paying a lot for it, and there's a spectacular amount of interest in it. And there's a great desire to make it happen. So it's about as positive as you can get at the moment.
Ron, about as positive as you can get. That's a good note on which to end. Ron, thanks for joining us today. That was Ron Heeks, Managing Director of Larvotto Resources, walking us through the highlights of the definitive feasibility study they've just completed on the Hillgrove Antimony Gold Project in New South Wales, Australia. That's it for this edition of Blythery Business News. Thanks for watching.